Bolt-ons are lower upfront investment, they have minimal operational disruption, and they have faster implementation.
It seems like it's following insurtech, following the same pattern.
Moment of truth for insurer buyers, 8 days to under 3 minutes.
Which strategy do you think delivers better long-term results?
Most of the insurance companies spend most of their costs.
Hello, everybody, and welcome to the Heuristical Podcast. I'm your host, Alex, and today we're joined by Parul Kaul Green, former Chief Digital Strategy Officer at Liberty Specialty Markets and a key figure in AI-driven insurance transformations. At AXA and Aviva, she led M&A strategies, built digital underwriting platforms, and implemented automation in claims processing. Now, as an advisor to insurtech startups, she's tackling the industry's biggest challenge, how to integrate AI without disturbing compliance and profitability. We'll dive into AI in claims and underwriting. Will it finally make insurance faster and fairer, or we're just teaching old systems new tricks? Buckle up because Parul has the answers. Welcome to the show, Parul.
Thank you. Thank you for having me. And thank you for such a great introduction.
You're welcome. Parul, you've been at the front end of digital transformations in insurance. What specific inefficiencies in claims processing do AI agents most effectively solve today?
So, when it comes to insurance claims, one of the things that will help you frame the size of the prize or why claims are a good place to start on any implementation of technology is they are the proof point that the insurance is a safety net. So it is also referred as moment of truth for insurance buyers. Importantly, it is where most of the insurance companies spend most of their costs. So loss costs are the highest expense on an insurance profit and loss. So that these expenses are efficiently tackled has both customer experience angle and also shareholder return angle. So that's why claims are a very, very good use case for AIs that are determining claims efficiency, which is that loss adjustment expenses come down and also frauds come down. Third, that claims are made to all deserving cases. So, in terms of triaging and determining what is the coverage of claims and whether claims should be paid out, that is also an area that AI can be made to be deployed in that case as well. So, claims triaging, first notification of loss, fraud determination, and finally, reduction of loss adjustment expenses by making claims more efficient and putting simpler claims in straight through process and more complex goes to the human being. So that's why claims are such a great use case for AI.
So to build on that, claims automation often faces skepticism regarding accuracy and fraud detection. How do you ensure AI models are both efficient and ethical in handling claims? Maybe you've seen AI systems catching a fraud cost that a human totally missed, or vice versa. Can you share the examples if you have?
So you're exactly right. So claims, because of their importance in the insurance value chain, it is, and also the fact that it's a highly regulated industry, and regulators are particularly there to make sure that consumers who are insured and the claimants are fairly treated by the insurers. This is an area where governance requirements become really critical. So any determination that a model or a claims model does in terms of claims triage um, even with the simpler models, they have to be explainable.
Mhm.
So they need these models really rapidly test these simple low values cases significantly, like for example AI gym by Lemonade. It's thoroughly tested, and any anomalies which were detected are addressed very quickly, because this is an area you can use lose your reputation. Other thing that we also see is there are human in the loop protocols for all claim denials. So if there is a claim that we are saying that it's not covered, we will not pay, there is a human who will be placed in the loop such that they review the negative decision before conveying it to the end customer. So that is highly effective in a sort of partnership model where AI is handling pattern detection and recognition, and also cross referencing with policy coverages. And human is providing judgment, especially for complex cases where you would, or edge cases where you could think, oh, is it covered or not covered? Should we err on the side of caution, or should we accept the claim? All of those determination mean that human in the loop protocols are hugely important for claims determination, especially in commercial insurance where claims can be worth millions of dollars.
Yeah, I think we spoke about importance of governance in RegTech in the previous discussions on this channel. It seems like it's following InsurTech is following the same pattern. Like governance is such an important aspect of implementing AI in this industries. By the way, talking about implementation, so I know that some insurers taking like a bolt-on approach and they actually layering AI on top of legacy systems, while others, perhaps like the startups that you are advising, like they push for full digital transformation. Which strategy do you think delivers better long-term results?
You know, it really depends. Now, let's look at the pros and cons of bolt-ons. Bolt-ons are lower upfront investment, they have minimal operational disruption, and they have faster implementation. There is cons as well, because insurance industry has huge number of legacy systems. Some of them are not API ready. Therefore, you need to put a lot of middleware in order to make them ready for AI usage. So there is very limited scalability in bolt-ons and integration challenges, and there might be long-term costs. With full transformation, there's higher initial investment, but it has greater scalability, and the efficiency that you gain can be persistent across multiple value streams. Um, the other issue that the cons that I see, other than the high initial investment cost in full transformation, is also adoption. Change management becomes really tricky for full scale transformation projects, and there's always cost overrun because people are not familiar with, and people resist moving to newer systems which are wholesale changing the way they were doing work.
Yeah, I find so many common things in terms of the approach across the industries. It seems like every industry is making those tough choices, whether to build something from ground up or actually layer things on top of the legacy systems. Um, interesting. Thanks for sharing the your view on this. Let's chat about underwriting process and the role of AI and underwriting. So AI underwriting promises speed and accuracy, but risk assessment remains complex. What role do AI agents play in enhancing underwriting decisions beyond traditional methods?
So if you look at how the underwriting happens, you receive submission, which would be client information, It would be received from the client or client's brokers, intermediaries, or agents. And all this information is received in unstructured form, incomplete data. So, data quality issue, not in structured form, so therefore needs to be transcribed in forms and then inputted into the systems, which are underwriting systems or underwriting workflows. All of these submission related, unstructured related data, it causes a lot of latency in underwriting decision making. It can take up
Right.
to 8 days. This is what you would call a low value activity, because this is not where other underwriter is taking the decision whether to accept or reject a particular submission. So this tends to get outsourced or to low cost geographies or
Mm-hmm.
nearshored. Offshore, nearshored, outsourced. These are the three ways in which operations within the underwriting function tend to deal with it. But there is a very good use case of using NLP or IDPs in this particular case. With the large language models, they have very, very high capability of accepting multimodal inputs. It could be voice data, it could be your videos of the site showing, say, for example, you were underwriting a particular factory, you could receive video of where the factory has sprinkler systems, where it has fire extinguishers, and all of those things can be received as video by you. All this information can be relatively easily ingested by a LLM rather than a human being, which means that the turnaround time of reviewing the submission data, turning into structured forms, and querying such data is reduced very, very quickly. So, submission is a very, very good use case. Submission and submission triage, where you query internal data sets or query the policies or query what is acceptable risk and risk appetites of the underwriters to determine whether this policy should be moved on to a human underwriter. So that entire submission management or submission triage is a very, very good use case in my experience of AI in claims. And rating assessment as well, when you're inputting external data sets, IoT, which are huge amount of information being received. It's very hard for a human underwriter to make a determination based on all of this really data dense inputs. So that's a very good use case for AI as well. So um, you have the actuarial triangles and actuaries pricing table, which makes a determination how to price a particular risk in terms of risk assessment. But there are so many preparatory stages which require huge amount of ingestion of data and then detecting whether a characteristic of particular risk and then making a determination whether this risk is acceptable or not. There is huge amount where the AI, specifically agentic AI, can be a very, very labor saving and efficiency gaining device for underwriters. And that's where how the insurers make money, in writing good risks and in identifying those good risks. So that's a lot of work which today is outsourced or being done by um, low expertise assistants, which can be
Mm-hmm.
done by agentic AI. So I see a huge, huge amount of value that we can drive in underwriting through use of AI.
Yeah, so that actually makes me thinking. So okay, so the efficiencies are clear. We will actually reduce the latencies of the process by introducing AI underwriting. What about the cost? Have you seen like actual cases? Maybe in throughout your involvement with EXA and Aviva, like, is there any impact on the bottom line? Are actual insurers making more money, by introducing AI underwriting, or it's more like following the trend, more like a buzzword thing? that we're actually using AI?
So there is a lot of cost saving. um, the statistics that I will give you is that typically underwriter in commercial insurance and reinsurance is only able to see 20 to 30% of submissions sent their way because it's humanly not possible
Yeah.
to ingest and all this data for a human underwriter or even underwriting assistants. The throughput and conversion ratios when we have implemented AI have shot up. The number of risks you can view become expand hugely, up to 50 to 60% expansion, and the and the time taken to quote those risks also speeds up fairly significantly. Examples on less complex risk are from 8 days to under 3 minutes. And then what also happens is that you are able to put your line or accept risks which are more profitable risks as well quicker. So when you only see 25 out of 100, you do not know whether the 75 you didn't see could have been more profitable risks or
Hmm.
were risks which were with more within your appetite, or were people who don't incessantly claims and have very good quality risk engineering. But when you're not able to see all 100, you're not able to make that determination. You are looking at subset 25. That also improves significantly. So your risk acceptance, risk quality of your book improves, which means the loss ratio will come down, and your conversion ratios also improve. So your top line growth is also becoming much better. So in terms of, we are seeing the number and turnaround time numbers are coming out. Loss ratio determination are more longer term, but indications are that there will be up to uh, 2 to 3 percentage point improvement in loss ratios, even in short to medium term, with implementation of strategic implementation of AI. Everything is not an AI use case because there is a cost attached to it. You have to circle back and see, is this valuable enough use case? Will it generate return on investment by way of reduction of underwriting time and improvement of quality of risk? So that's something that is very, very important to consider.
Yeah, so the perspective of AI implementation in SureTech is huge, and how that technology can impact the industry. Um, I curious. So you're advising, the companies that are changing the industry in a sense, with implementing the new technology and driving the change. I'm curious to hear, in your opinion, what are the critical gaps that you see in AI adoption across the industry and the insurance industry?
So it's a very good question, and I will add here both my experience and those of the clients that I'm speaking. So my experience and those of the clients is that data quality, legacy systems, and also talent which understands both underwriting and insurance value chain and technology is a big area that insurance industry struggles with. It's a traditional industry, and people who are working within insurance industry tend to be not such big technophiles. So there is always a resistance and change management issue. Data quality and data governance is not uniformly implemented. I have seen companies, large companies, who have data governance in place and frameworks in place, but these are never uniformly implemented, which
Hmm.
means that data quality still remains an area which needs much to be desired. So that's a biggie. Legacy systems are a biggie. So many systems are not API ready, and you need to do a lot of preparatory work in order to implement a AI use case in a particular workflow or a journey. And there might be the case that those workflows are entirely manual. So you need to first digitize the workflows, or or think about how else can you impute a particular AI model within the workflow. There is, you can say, well, they can probably implemented through UI, but then each underwriter and actuary are looking at 6 to 7 screens at a time. Another UI is hugely disruptive. So there is always a pushback if it's not if it cannot be API'd into their own workflow. So those are a few of the concerns that I repeatedly hear from people: data quality, legacy systems, and risk averseness of traditional insurance work.
What trends do you observe throughout, the clients that you work with, startups that you advise, emerging AI technologies that you see already, disturbing the market or have the most disruptive impact on insurance industry and underwriting and claims processes in particular? Let's look at, I don't know, 5 years seems to be like too long period to look at. Let's look for a year.
So this will sound like buzzword bingo, but it's agentic AI because of one, that insurance sits on 80 to 90% unstructured data,
Hmm.
and ingesting and making it usable is a very powerful use case for agentic AI. And this is not just in underwriting and claims, which are the most valuable use cases. It's true in finance as well, in risk management and compliance as well. So there is a big opportunity that AI agents present insurance companies. Although, given that it is highly regulated, a human in the loop implementation is much more desired than straight through processing with no human oversight. I wouldn't advise that. So that's one area. IoTs are another biggie. There is a lot of data out there which is not present or not available to insurers through their submissions or through claims, which can be real time imputed through IoT. It also helps them in dynamic pricing. So that's another big area that I think is something that I think in next few years will drive a lot of benefits for the insurers. And in terms of modeling risks like catastrophe modeling, secondary peril modeling, it's an amalgamation of IoT satellite data providing you information, and AI making this information real time ready and usable for your particular use case. So there's an amalgam in actuarial modeling and CAT modeling, which can be delivered through use of external data and the AI used in that particular environment.
Yeah, it's all heavily driven by data, right? Like
Yeah,
if you can figure out the data, then you can do whatever you want with AI agents even today.
yeah,
Leave it alone a
exactly.
year from now. Parul, I'd like to wrap it up with looking at, since you worked in different cultures, Europe, APAC, now you are in the UK. And I'm when I talk to people like you, I'm always curious about cultural aspects that you've came across. So how do you think like AI adoption in your industry differs across these markets? And maybe there are certain markets that, are way ahead of other markets, and we can actually bring some lessons that you see happening in one market that others can learn from, one market to another, or it could be shared globally.
So it's a very interesting question, because now I am working with US insurers. I have in past worked in Asia and Africa as well, um, in AI and insurance use cases. And Europe is, of course, my home geography. So it, there are some differences in the AI implementation in and AI adoption in these geographies. So, for example, let me start with Asia. Asia is the most populous continent, and that means that any implementation is driving efficiency into the processes, that the scale of operation and scale of data that needs to be ingested becomes an area where Asian markets prioritize implementation of artificial intelligence use cases. So, for example, some of the implementations we had were in our health insurance business in triaging health claims, in determining whether a particular claim needed to go to which type of specialist. This was used to be done by nurse practitioner, but because the volume can be quite overwhelming in Asian geographies, that there was an implementation of AI triaging tool, which made we implemented that across Asia and Africa, in Egypt as well, which was a very valuable implementation for these really populous geographies where a density of medical staff available tends to be low and the population tends to be high. So that's
Interesting.
a use case in Asia. In US, they tend to be quite focused on where do you drive most of the value in a particular value chain. So underwriting and claims use cases implementations are quite strong within US geographies. Many of the implementations that I'm supporting are in insurance and reinsurance in US in the area of underwriting and claims. Europe also follows what US does, but much more cautious. They tend to have more controlled experimentations. They tend to be extremely cautious when it comes to consumer protection, consumer duty, GDPR, privacy, AI and ethics. That tends to be a hugely important issue, even at the type of experimentation, which has both plus and minuses. Pluses are that when you have a thought through implementation, you make less errors. Minuses are it can take a lot of time to get an AI project into production. It can be from months to years to scale a particular AI solution. So that is what my experience in these three markets has been.
Yeah, that's very interesting. Like, there is definitely in your industry, there is definitely correlation between the population and the rate of adoption. It's interesting to think about. Parul, that's it for today's interview. I thank you very much for taking the time to chat. It's been really insightful for me and hopefully for the audience to learn about insurtech and how AI is changing the industry. And yeah, that's been a great conversation.
Thank you for having me. Pleasure speaking with you.
Thank you. And for the audience, I hope you enjoyed the episode. Don't forget to subscribe to the channel. We're now on YouTube, Spotify, and Apple Podcasts. Leave feedbacks, hit the like button. You know what to do. And see you next time. Bye-bye.